All right, I'm going to call this episode The Bears Last Stand. So we have some interesting stuff going on here on the S&P, and I'll take a look at some other things that are going on as well. I tried to put the video out yesterday through TradingView, and it crashed again. Uploading through TradingView is a pain in the butt. But anyway, this is just a zoom out on the shape of this crazy market. I mean, we had this 10-year kind of bull run off of the 2008 financial crisis crash, and then let's just look at where we are here. So this is Volmageddon in 2018, and then we have the late 2018 crash here, right? And then we had our big Feb 20 crash here, and then obviously the biggest move up in the history of the stock market. So right now, we're getting a few interesting things. Well, let's just real quick, silver is spiking like crazy. Yeah, silver's just freaking nuts. And so silver should do good in a very high inflation environment, and high inflation when it's also a good commodity environment. So silver is a tricky one, but it's an alternative kind of currency play for high inflation, basically. So silver breaking out huge is a big inflation play, and that would make sense because everyone says like the Fed's printing money like crazy and all kinds of stuff like that. And you can see gold is making a move up too. So that is people betting on inflation or the dollar getting weak, And so if you take a look at some indicators though, this is the long term on the dollar. Like the dollar has made a move down recently off of the last high, but it's still above this super long term. I mean, this is the financial crisis back here, but we have a long term strong dollar trend line for like 10 years. Hasn't broken down below that. So I'm not buying the weak dollar until I see that actually break down below here. We're coming into just the support area, and we'll see if we get support. But yeah, I'm not buying the high inflation yet until that. I need to see the dollar breakdown, and then these are the bond yields. I have to get in a little closer on this thing. So you can see the spread on this is a 5 to 30 year spread. So the yield curve got a little bit steeper down here, which would be a good inflation indicator, but it's been flattening back out. So that's not a good inflation indicator on the spread. And then if you look at the actual bonds, like maybe a 10-year bond yield here, yeah, you can see that we just kind of have a little bit of a consolidation zone, and looks like it should make a move soon. So for inflation, you want the yields to go up. You want higher interest rates. Not that the Fed is going to assign a higher interest rate like the Fed funds, but you want the inflation and GDP estimates to be trading the bond yields up. And the bond yields really lead what the Fed does with the Fed funds rate. And so for inflation, yeah, you want to see the DXY, the dollar break down. You want to see the yields break up, but it doesn't look like that's happening yet. And they're both just kind of haven't decided where they're going to go yet. And the dollar's right at support. We'll see if it breaks down. This thing's coming into a contraction, so it could break either way. But as far as the markets making a bet, I guess, before it happens, the bet is high inflation, and I don't see it yet. I just don't really see high inflation yet. And we'll get new balance sheet numbers and everything tonight. But I pointed out a bunch of times, like this whole period in here, the Fed has not been expanding the balance sheet. It went above 7 trillion about here, and it's actually come down below 7 trillion now. It's been decreasing over the last month, and now we'll get to see it again. We'll get to see it again tonight. But right now, it looks like the Treasury, the Congress is doing minimal, helicopter money. Like the PPP loans ended. They're still doing the extra money on the unemployment check. So that's going to end in a week. And they haven't come out with new helicopter plans. And the Fed is doing, minimal bond purchases. I think it's like 10 billion or something like that, but nothing relative to $4 trillion or something, that they went crazy on. But let me zoom in on this. So, we got this move down and we're underneath this 2-year support line here off the 2018 crash. And this is something I've been talking about for a few weeks, as if we get up here and tap this or double tap it, this is a good spot where you could get a bearish reversal point underneath. And you can see something similar happen back here. Like this is Volmageddon, and then you go up on top of the support line, and then you double tap underneath, boom, and then you break down. And you can see where we broke down to here. So if it gets another breakdown, like that's how far it could be. It could be really dramatic, but yeah, but that's a dramatic, like, extreme scenario. Let me zoom in on this. Let's get right in on it and see what it looks like. Whoa, it looks like a mess. All right. Yeah, so you can see that we are just all over this trend line right here. So that's too close. Let me go back out. So here's the previous island top. That was a few weeks ago. And so we came up here and bounced around parallel to the island top, and people were looking for a reversal here. But yeah, I was pointing out that this is really the spot here underneath this trend line to look out for. And right now we are all over this trend line. And so, yeah, I said I was going to call this episode The Bear's Last Stand. And that's really what this is here is this is the last spot for a bearish reversal before pretty much everything in the market goes bullish. The momentum will be bullish. The technicals will be bullish. The economy is a wreck, but if it's a high inflation environment, the economy doesn't have to be good for the stock market to go up or the other assets to go up. You can just have a bunch of money printing, pushing things up. And so that's what everyone's expecting. But as I've been saying for the last month, like they're not doing it. They're not blowing up the Fed balance sheet. It's come down. The Treasury General account has not started pushing a bunch of money out. And we'll probably see a bill or something passed from Congress before that happens. Although they do have like $1.5 trillion that they could spend in a hurry, but they haven't been doing that. The market's pushing out, silver's breaking out. So yeah, I want to see those numbers, but it still doesn't look like the environment where it makes sense. What's happening does not make sense still to me. Unless there's additional money coming from somewhere else that I can't see. I heard that people in Europe, some rich, billionaires or something like that, were taking out loans to buy U.S. assets. So that could make sense as like another source of money coming out. But the technicals aren't really supporting, or the fundamentals definitely are not supporting what's going on now. But the liquidity itself doesn't really match this thing. It doesn't make sense to me right now. So I'll keep looking at the liquidity, and we'll get to see the balance sheet and everything again tonight. But yeah, this is the last spot really for a big bearish reversal before we go into actual bull market mode. If we can get above this thing and get support, then that would put the momentum, the technicals, pretty much everything into bull market territory. And we're above the long-term, trend lines. We've been above, the 100-day or 120-day moving averages for over a month. And so we've been in kind of a bullish area yet, but it's not fully a bull market technically yet, but it's very close to becoming one. So anyway, this is a big dramatic spot that I wanted to point out. So as far as the odds that it goes up or down, I mean, the momentum is up, so I guess the odds are much higher that it goes up, maybe 70-30 that it continues to go up, because that's what it's doing. But but the size of the move down could be a lot more dramatic, just because, yeah, here's the moving average down here. So I mean, if it reverses off of here and gets through the island top, then it's all the way down here. The next target is a pretty big move down, and it could do that in a hurry if it does break down. And so that's the thing to watch out for this week is if we do kind of a double tap reversal off the bottom side of this long-term trend line, or if we break out into a new zone. So that's what's going on. It looks like everyone is betting on super high inflation, and that sort of makes sense in theory. I can understand why people think that, but the actual liquidity fundamentals are not supporting that theory at the moment, not yet. It could happen soon, but yeah, it's not happening. It's not happening yet. So I think that people are just kind of preempting that happening, and potentially the Fed overshot. When the international liquidity got squeezed, they maybe printed too much, so now they're backing off a little bit. So we could still be seeing the sort of the leftovers of that now, but if they don't, if they don't create a bunch more liquidity, I'm not really seeing the high inflation environment. So that's just a look at it. This is not investment advice. And yeah, let's look at the other sectors, right? Because the leading sectors were, yeah, kind of stalling out a little bit. Like they haven't broken down. Like these leading sectors really need to break down in order for the actual stock market to make a down move. The industrial infotech, or I'm sorry, the keys, the infotech, the Nasdaq, and such have been on the craziest like straight shot, like high angle bull market line in history. It's kind of nuts, but they're stalling out a little bit, but not breaking down. But you can see the other sectors, the weaker sectors, like the small caps. This is the Russell, and the XLF. This is financials. Both of these are, I mean, they were getting weak coming into earnings, and now they're making a little bit of positive moves. So you can see a little bit of rotation into these other sectors. So this is all, yeah, a bunch of bullish kind of things lining up, but just that's one last major bearish spot to contend with, and it's not a joke. Like the bottom side of these long-term support lines are major bearish reversal points when they happen. So that's the thing to look out for right now. Are we actually getting the inflation everyone's thinking we're getting? Because I don't think so. Or just doesn't. We're not seeing it in the actual, the indicators right now. I'm not saying it's not happening. It just hasn't shown up on the charts yet. And yeah, and this is it. The Bears last stand. So I hope you enjoyed it. Please like and subscribe, and happy trading.